Good evening, ladies and gentlemen. Welcome back to the Passive Income Investor channel, where I really want to talk about the insanity that might go on with PayPal come Monday. I want to do a bunch of Q&As. Welcome to the new studio. It's not like CoffeeZilla, the $1 million studio there, but hell, it's a start, isn't it? I usually don't show my backdrop, only on live streams, but a lot of people seem to be pretty enthralled by the nice little studio that I spent a good year kind of building here. But otherwise, yeah, there's a lot we got to get into here, from politics. We're going to get an early election here in Canada, to Google. We'll talk a bit of Aduro, PayPal. If you didn't see the whole honey influencer scam thing that went on, which was absolutely wild. But before we get into like all the big cojones of what we're going to talk about here, I really want to just kind of answer some Q&As, because my God, there's been a lot of fun stuff going on this week, and you guys had a lot of good comments. Like, you've gone way too conservative for being involved every day with research and time and all that data you have on your hands. And the problem is scale, right? I don't think it's like the problem of, just because I know a lot that I feel comfortable buying a lot of stocks. I'm going to get to a compound calculator, and I'll show you at scale why, trying to take on excessive risk, and just own a bunch of individual stocks just doesn't really seem worth it to me these days. Because again, like, as much as it seems like I do all this research, and I'm sure a lot of people do, you still have market risk, right? And I don't think people appreciate that no matter what stock you own. But hi, Kyle, love your channel. AI, I'm a seller of Microsoft business applications to enterprise accounts in Canada. Customers are looking at AI, but there has not been a widespread adoption due to the high cost versus ROI. AI is not a big profit maker yet, which I'd be really curious to see people's thoughts on, perhaps Palantir and what kind of software Microsoft might be selling, because I personally believe the AI hype bubble is slowly starting to kind of reach its end. People are starting to realize the scaling problems. And some things it's amazing. Other things where we think it's going to be like this huge, like it's going to generate mass videos, and like, there won't be a need for The Rock and these big actors anymore. We'll just be able to generate them into these movies at at a text prompt. I think we're a long ways off from that with the current scaling, but even still, like AI where it sits today, I use it. I'm sure a lot of people use a variety of it. Heck, it's so competitive in the landscape right now. I mean, Grok is free, right? I mean, all these people that were trying to make big money off of it realize they can't, because it's going to be like Google. Google, like, we're just going to take all the eyeballs for free, and then we'll, advertise or make money later on. Like, it's more about just getting the share ownership, right? Hey, Kyle, do you think the SCHD ETF will get punished with the bear market possibly coming? Usually they do a lot worse in a downed market, but I'm heavily invested into SCHD. Curious about your thoughts. Will you continue to dollar cost average into SCHD? Yeah, I think my recovery plan on SCHD is going to be proven wrong. I really thought that we would have seen more aggressive interest rate cuts at this point, but the fact is a lot of these dividend ETFs hold everything from, housing things like Home Depot to even like Altria Group, and a lot of stocks that tend to have a little bit more leverage on the balance sheet, stocks that technically do not perform as well in higher interest rate environments. So we need to start kind of leveling off from the higher interest rate period, and it's going to be a slow grind from here. Unfortunately, it's not like in Canada and in some of these other countries where they've already dropped rates pretty low, so housing can start to pick back up and a lot of other things can start to come into play. But this is where you're going to kind of look at it as an opportunity. I honestly don't think for somebody like you, depends on your risk, because you already seem a bit concerned about it. So maybe looking at like fixed assets to remove that market risk, because if you're not prepared for your stocks to drop 40 or 50% like that at any given time, then you shouldn't be owning that many individual stocks. Like, think about it. Look at your whole portfolio of equities and just tell yourself, if this dropped 50% tomorrow, will I be okay with that? Because that could happen at any time from even the S&P 500. It's happened in the past before. Is it unlikely? Sure. But black swan events, no one can see them coming, right? So you just got to understand that. And if you're an income-oriented investor in these down periods that we go through, if you're like me or like a lot of dividend investors, you might be like, damn, yields are going to stay higher for longer. I can fast track some of the income if I want to get it, because I'm not as much of a growth-oriented investor, right? But that comes into questions with things like this. So what do people do if they don't have an extra emergency cash on the sidelines? Basically saying, like you, which is funny because I don't think I'm that privileged to have cash on the sidelines. But with the unemployment rate so high, a lot of people's money is tied up in investments that has taken a massive dip. This question is really interesting because if you have a lot of investments and you're not protecting them by having an emergency fund, I mean, that's a different level of risk. And I think most people probably don't even have enough money for an emergency fund. It's very tough market environment. I'm sure for a lot of younger people, a lot of people that are feeling the brace of unemployment with the recession or depression that's going on in like software engineering right now. I did reply to her, just kind of giving an idea, but like, yeah, you need to be prepared for massive dips in the market. You can't just bank on this as a guaranteed return. It's like, from 2022, that year period where the market just went down, people just accepted it. And there wasn't a lot of viewers on YouTube channels. Jeremy, me, Kevin, you name it. Any in my YouTube channel. I mean, our views are skyrocketing right now because people can't lose money, which is not a healthy thing for the market, right? So I think Jerome Powell, the man, the myth, the legend, I don't think people give that guy enough respect, but I got to say, the dude's really bringing home. And I only care about the value of the USD, just like you should only care about like the currency value and like what your economy is looking like. But I think Jerome Powell is actually doing a fabulous job. I think he should be president. Half portfolio CAD, half portfolio USD, all about diversification, taking a profit, dollar cost average, and keep rocking it, Kyle. Yeah, let's go, baby. A little more CAD than I'd be comfortable with, but obviously Jason's a living legend on this channel. The guy's been OG. I think I could call him up. I think I got him in my group. I'm just going to shoot him a quick call one day here over the holidays. Jason is like been here from the beginning, man. This dude's far beyond even where I'm at this point. I think this dude's like a multi-millionaire, which is pretty wild. But yeah, good for you, man. I don't, like I said, for me, I don't know if I'd be comfortable with like half my portfolio Canadian stocks. I think the Canadian economy will do fine. There's a lot of rich people here. There's a lot of concern over the Canadian economy right now, but you can't use that concern as investment advice. But yeah, it just depends on personal preference. But I'm a US guy when it comes to investments for the most part. Kyle, love your channel, love your charisma, and I love what you're all about, but I'm contrarian to about 50% of what you tout. But who am I to talk, given that I'm not putting my face on YouTube or having a following? Keep up the good work. Thank you for the perspective and the content. Yeah. I don't expect you guys to agree with half the shit I say. Like, obviously, there's going to be a huge percentage of people that just don't agree with what I say. And there's going to be the percentage of you that follow this and agree with what I say. And that's the world, right? It's like politics. Half the people are going to hate you. Half the people are going to love you. You just need to tip a little bit more into the other side to win. It's unfortunately the reality of business, life, social media. And I would implore anybody that wants to come on and have an adult debate, as most people are just keyboard warriors these days and like to complain online and, post their contrarian opinions. But it's nice to actually have like some kind of discourse online. So if you're comfortable about it, never hesitate. I'll send you guys a link right now. You can join the live stream. What is the Canadian version of SCHD? There's a bunch, XDIV, VDY, and probably VDY is not a good example because I think SCHD is like using a mechanism. Like they actually have a screener that they're probably using to find stocks that meet certain criteria for dividends on the Dow 100 or whatever, the Dow 100 dividends or something like that. Yeah, it's just that VDY is a lot more concentrated. I think VDY is more comparable to like Vanguard dividend ETFs because Vanguard's like mostly market cap weighted, whereas SCHD is not. SCHD is a whole different mechanism. Thanks, buddy. XCI is good too. Like even in my parents' retirement account, like I wouldn't even just, if you're looking for income, I wouldn't just stick with VDY because you'll over concentrate. But XCI, like there's like, I think maybe 3 or 4 really good Canadian dividend ETFs out there that you guys can stumble into. But moving on, my 2 dividend plays are VDY and XCI, of course. VDY is the position currently building because it has more exposure to the banks, and I think they would do well over the next 4 years. None of the refineries in the Midwest can refine American oil. They are set up to process Alberta heavy. It would take billions to retrofit them. They are just going to have to fight with the tariffs. The volume decrease, but they won't be able to switch supplies. Very interesting take. I'm presuming that you work in the oil fields. And yeah, that's like the biggest debate is energy right now. And if tariffs come into play, I'm going to talk about politics in the bulk of the other half of this live stream, because I think there's, some interesting takes there. But yeah, oil is my biggest fear. Canadian banks will do fine. Canada's made up of rich people. You can tell it's like so obvious. So the banks tend to flourish or be fine. And I think they're going to get to a period where, again, we'll get to a normalized, there's no guarantee, there's market risk, but I'm presuming loan loss provisions will eventually tamper and the banks will start actualizing the record revenue they have. But time will tell. You're into ETFs a lot. I feel you'd be better off 50% VOO and 50% in stocks. Pick 10 to 15. So I think it's important to note those that are part of my courses or whatever, they can see like our combined portfolios between the wife and I. And I want to use my compound calculator because this is what everybody should be using. Forget like the hundreds of thousands of dollars that we have in real estate. Forget like everything else. Just looking at my portfolio, not the waves, not anything else. 350K at 32 years old. If I make it to 62 in the next 30 years, man, that's $6.1 million. Like the way I'm going, like, it's not about like, again, I want to take advantage of this a lot earlier than that. But I think it's important to note that like, it's not like I'm going to be drawing against my funds that'll just drain them or anything when I want to start using dividends or something at 35 or 40. But it's important to note that like, you got to think about the long scale. I don't plan on dying right away. So it's like that money is still going to compound and grow. So it's like, I don't need to take on as excessive market risk. And we do take on a lot of market risk. I mean, we have tens of thousands of dollars in Google stock right now. It's our single largest position, probably somewhere closer to 7 or 8% of our whole portfolio, which is, quite a lot. But to me, that's like my comfort level. Like I have a few individual stocks, maybe like I'd have to check, but probably somewhere around 10 of them at this point, I would imagine, mostly big tech companies, some other companies too. But I mean, at this point, like we've been itching out extra percentages, right? So let's say with even the dividend ETFs, tech stocks like Meta, Google, they're able to shoot up like 50, 80% again, like they just did in the market. Like even if I can inch out a couple more percent a year off really good companies, I mean, you're talking about millions of dollars over the next 20 or 30 years. So I don't feel like I need to just expose myself to limited stocks that I'm not sure of the market risk in the future, knowing that these things could drop at 50% at any time, right? Like there's going to be a lot of volatility over the next 30 years here, folks. So I just, again, adjust based on my risk tolerance. Some people might be comfortable owning a lot of individual stocks. At this scale of our portfolios, I'm just not. It's just, again, when you make, retirement-like money early on in your life because you were able to take on risky, more excessive bets in the market and it worked out. Like I'm a true believer that I'm not a gambling addict. So, I can look at that money I earned and not be like, okay, I got to go find the next 10 bagger tomorrow. I recognize that finding really good stocks takes a lot of time. They're not always going to work out. I've experienced great losses in companies. So it's just like, figure out your formula and wiggle your way through this very complicated mess that is personal finance. Because again, like health, sometimes you have to focus on it, or it's like my favorite saying, it's a little crude, but what is it? Money's like a cruel mistress. If you don't give her enough attention, she eventually just leaves. Sad reality of cash, just like your health, man. If you don't pay attention to your health, eventually it's just going to fade. Google is already humongous. Aduro has way more room to grow. Aduro is still speculative, but they have serious vetting from all those petrol companies. Also, Aduro is solving a standing problem that is a global and must be solved. When Musk said recycling is pointless, did he point to any solutions? He did also call plastic recycling virtue signaling. Well, thanks, Elon. For a while, I didn't know how little the plastic industry, I put in the bin was actually recycled, basically. It's a kind of a joke. I admit it. But does that mean I was virtue signaling? Oh, well, I'm going to virtue signal like nuts. Aduro. So first on the Google point, Google, in my opinion, and the reason that I'm scaling it as like the single largest position in our portfolio is because I'm willing to take on the market risk that whatever class action lawsuit on the monopolistic behavior, when that comes down next year, if it comes down next year, which should be towards spring, I don't think it's going to be as severe as the market is priced into the stock. That is the disconnect right now. And I really think, again, a 25 price to earnings multiple on a leading AI company, forget quantum computing. This company is growing way faster than Apple. It makes more net income than Apple. It has a better balance sheet than Apple, yet Apple can command a 40 times price to earnings multiple and trade at almost $4 trillion. I don't think that is necessarily just. So I think Google has a lot of room to run here, presuming I'm right and I'm not wrong, and the next earnings or two could really define that. So we'll see what happens. I'm going to hold it as a long-term hold because it's a pretty safe company all in all. When it comes to Aduro, I think this video I saw this week actually is hilariously in line with what you're talking about, because Elon was really saying that recycling is a waste of time. But this is hilarious because some of those big oil giants are getting sued.
You may not realize it, but the vast majority of plastic products that you are putting in a blue recycling bin actually just ends up in a landfill. In the US, less than 6% of all plastic actually gets recycled. Did you hear that? 6% gets recycled. And that's mainly because various types of plastic contain different chemicals that need to be processed separately, and the current infrastructure just isn't built to handle that.
Yes.
Now, this week, a group of plaintiffs in Missouri, Kansas, California, and Florida filed a class action lawsuit against dozens of companies and organizations claiming that they have falsely promoted just how easy it is to recycle plastics. CBS News Los Angeles climatologist Marina Dorica joins us now. Marina, I'm so glad to be discussing this with you because it is a frustration for me. I'm sure it's a frustration for you. Let's start off with exactly who's named in this lawsuit. What do the
You don't have to. It's big companies. It's big. It's actually, we'll just listen a little bit.
Plaintiffs want from these companies?
That's right, Lana. It is extremely frustrating. Some of the defendants are oil and gas companies, including ExxonMobil and Chevron, because over 99.
Yeah, which is quite hilarious because basically oil giants, I guess, were over pushing recycling. And that's why they partnered with companies like Aduro to test out like these new chemical recycling, patents that these guys own that are just brilliant. Like I said, I like Aduro is a highly speculative investment. And I want to scale it to probably being in the top 10 of of our holdings, just because, I really, really think that there's going to be some insane reality hitting these big companies that are chasing to find like actual recycling methods because we haven't had it for decades. So it's interesting. But yeah, Aduro, I'm keeping it on my radar, and obviously we're going to keep diving into it here and there. But broadly, let's get into the portfolio itself. We'll see how we finished after the big volatility this week, the dumps, the pumps, and everything else in between. We'll read a few Q&As, and then we'll broad view, PayPal and some of these other things that I really want to get into tonight. Yeah, let's go. It is wise to invest in Healthcare. Oh, ETF in the next downturn. Yeah, healthcare tends to do better. It was funny and ironic that on the back of that big dump that United Health after the crazy Control-Alt-Deleting, that it actually pumped, and the whole healthcare sector pumped on the nervous market. Yeah, you could buy into some of those because again, you're playing traders, right? So if you think the market is going to go down, but you don't want to have like no market exposure, you could just buy kind of the contrarian investments, I guess, which would be more in line with healthcare and stocks people will run to in more depressing times. But also bought some junior staff. Fission Uranium is about to be sold. You guys looking into Fission? I think I've worked with Fission in the past, actually. A pretty intriguing company for you uranium bugs out there. I got a nice swing when it dropped 19 cents. Amazon news, and then went right back up to the 30s. What else are you guys talking about in here? Anything interesting before we get into it? I'm still holding Cameco. Nice job, buddy. 2025 uranium and copper. Yeah, should be interesting. Should be very interesting for that matter. Bonjour. What's going on, buddy? I got some people. Where are you from? Quebec, Montreal? Presuming if you're French, where the few French still live in this country. Where did Chucky go? Chucky is sitting right across from me here. And for those of you that might be new to the stream, I figured it looked a little bit more professional if I've got to do meetings and I want to use this backdrop and this creepy ass doll isn't sitting in the background. I mean, it's got some personality to it, but when you're talking to some pretty big businesses out there, I don't know what the hell they're thinking when they're like, what? Oh, I'm hitting things on the wall here. Breaking the wall here because I got to pull Chucky off. I blame you for that. No, it's all good. I just got to put that photo back up I just hit. But yeah, anyways, let's get into this, guys, by first and foremost, just kind of stating that we made a poll in the chat group, in my private WhatsApp group with all those other millionaires, guys that are just crushing this market environment. Damn, people made a lot of money this time around. But yeah, I think it's really interesting. We ran a poll and a lot of people think the markets are going to finish flat. If you're a Tom Lee believer, you think there's going to be a full rebound here. This is probably the dip buy of an opportunity of a lifetime. And honestly, I'm really curious to see, kind of how it pans out again, it really just comes down to policy at this point. I think policy is going to largely dictate what the markets are going to do next because earnings are still so far off that we're going to have to be a little bit more patient if we're going to see any correctional periods, from a lot of these big companies that have run a lot like Palantir or Nvidia, whatever. All these companies are going to have to start justifying these values on those next earnings, or we could start seeing some correctional periods or just a lull market while values start to catch up. But I think with all the geopolitical risk, we're in probably one of the most uncertain markets we've been in a very long time. And again, I truly believe that we are probably more on the edge of overvalued and in a bubble than we are in a normalized market environment. Because people are chasing, right? People are chasing this. We're in a momentum market, right? It doesn't have a whole lot to do with values anymore. So when I look at the value of my portfolio today, I'm presuming there's going to be at some point a massive haircut, which is why I own things like VDY and SCHD. And I, try and diversify the pot a little bit here just to be safe, because again, dividend ETFs will make up some income when the market isn't providing capital gains. Because if I can't take capital gains off anything or diversify or do anything, and I'm just stuck sitting here riding the market, having to make more money, I'd rather have cash flow. So I think a healthy 2 to 3% yield is a good spot for my portfolio. It makes me feel a little bit better just in case the markets do turn. What games you rocking in the metaverse these days? Yeah, Meta is still the second largest position in our portfolios. The wife has been holding that with diamond hands, and it's very greatly rewarded her. And I play Population One, which I am a troll, and I have been banned for 5 days, and I just got off my ban. I'm not going to get into that rabbit hole, but when I find I'm not even cheating. There's just glitches in the game that allow me to take advantage of going underneath the map and killing people like Call of Duty, and they banned me for it. Yes. Things are interesting in the metaverse these days. Come join me. It's a lot of fun. I could give you my gamer tag and we can play Population 1 together. It's a super fun game. Otherwise, outside of those two stocks, man, I think what's really going to be interesting is I think a lot of stuff has been coming to light in the market, and it's led to, as Elon Musk likes to call it, virtue signaling. I think a lot of people like getting on their moral high horse and, pointing fingers at a lot of people about a lot of stuff. And PayPal is just becoming the next victim of this. And I think this is like the actual just deserved like evisceration. I'm so curious if PayPal stock is going to absolutely get shit on tomorrow. And if it's worth shorting. And a lot of you probably, if you haven't been aware of the mega viral videos that are coming up, essentially PayPal owns Honey. And Honey was literally ripping off influencers. They were doing something that largely is illegal. And I'm going to summarize it, but we'll watch part of the video because I saw Moist Critical or Penguins actually talk about it. But I watched the original video. I've been watching so many people talk about this, but I'll summarize it in a sec. But just take a quick listen because this will give a little bit of a highlight.
Why? Because fuck you, Mary. That's your commission. But wait, there's more. My personal favorite is when Honey has nothing to offer, so pops up offering you to check out with PayPal, even though the option is already available at the checkout page. And of course, if you click the checkout button, PayPal poaches the sale. Classy.
There is just no world where that isn't illegal, right? Like there can't be a world where that can fly. That has to be something that this company would be run into the ground for. Like I'm no lawyer. I didn't pass the bar. Shit, barely passed the SATs. But I would still say, using my tiny little noodle up here, my smooth brain, that's a big no-no. I think they're probably going to face some big repercussions for.
So I don't want to watch the whole video. Go watch it. You can watch Pengu's video or go watch the original. I'm sure you'll find it just by searching Honey up. But essentially, Honey wasn't actually finding you discounts on the internet. Instead, what they were doing was basically stealing affiliate links and basically being the final click to sale, which, as many of you know, as an affiliate marketer, when you try and promote something and you say, hey, use Honey, you'll find discounts. They're sponsoring my channel. Well, they're also stealing all the checkout links. So they're making, Honey was purchased for $4 billion from PayPal. And it just shows you what that business model was like. And I'll summarize exactly what's happening here the same way he did, which is essentially, let's say you're at Best Buy or something. You find a TV you want, a salesman sells it to you. He gives you the little, like, here's my card, bring it to the cashier. They'll give you a discount. And then that guy will get a commission, right? But instead what happens is you're waiting in line at the checkout with his card and another sleazy salesman comes by and says, hey, I might have a bigger discount for that. Let me see that card real quick. Oh, yeah, maybe I can give you a bit more of a discount here. Take this. And then he gives you his card instead of the guy that actually gave you the initial card. It's like the sleaziest shit. And they're offering discounts based off their commissions, and it's like pennies. It's so funny. It's a horrible, horrible thing. So I'm hyper curious to see if PayPal actually takes wind of this and, their stock starts to tank. PayPal is one of the most grimiest companies on the planet. It's why I'll never buy the stock. And I gave up on PayPal because they stopped me from utilizing US dollars. I have shat on PayPal from day one, and everybody seems to love it. And I've gone so far out of my way not to use it because there was a time where I could accept foreign currencies like US dollars, and I could pull US dollars out of the account. But you know what PayPal said? PayPal was like, why are we letting people pull out foreign currency where they're not making us commissions? So you know what they charge? Somewhere between 2.5% and like 4%. It's insane. So they're ripping me for like more than any bank on the planet when I want to do currency conversion. And guess what? I'm forced to fucking do it because I can't pull that money out into my bank. So I either have to spend it through PayPal, which God knows they're making money on it somehow, or I have to pull it into my bank where I'm going to lose like literally a dividend yield worth of income off of it. It's such a fucking joke. I've always hated PayPal, man. Not always. They used to be good. When Elon started it, maybe back then it was good, but they've gotten so greedy. It's kind of like Google. I mean, Google, they're combating the old ad block. So, I mean, who knows? They all got their own grift going on, right? But I think what PayPal was doing with that company was directly illegal. Like, there's just no way it wasn't, right? It's not like us people here that, get paid to talk about stocks or anything. So it's like, that's like next level theft, internet click game. And I'm such a proud, affiliate marketing like advocate, because I really think people can make an instant career off TikTok and just reviewing products. But hey, GEI, BNS, TD, BCE. I always thought Honey was selling credit card info and selling it. No, they don't care about that. They just want to make sure they're getting the affiliate commission off everybody. So literally, if you have a favorite YouTuber and they're affiliate marketing something and you click on it and then you go to checkout and Honey comes up and it's like, hey, I can get you a discount, and you click the discount code, they immediately steal the influencer's commission, which is hilarious. Yeah, RioCan in Canada should do. How is the old RioCan doing? Let's take a quick look here. I'm actually kind of curious because a lot of these Canadian REITs, they should start to see a benefit. And I mean, I don't know if you guys have been to the mall over the holidays, but my God, wow. I thought Boxing Day was bad. I went to get an oil change today. I passed the mall and I really wanted to go for a walk in the mall. Yesterday, we went to the mall to try and go for a walk. There's nowhere to park. I'm like, did everyone just leave it to the last minute? What kind of clown leaves Christmas shopping till like a few days before? Like, Jesus, man, it's like unbelievable. But hey, the people keep saying the economy is weak, but I'm telling you, Canada's got a lot of rich people, and at least the outlet malls, they're getting some cash here, and it looks good for companies like RioCan. I shouldn't be looking at the OTC ticker. I should look at this one here because, yeah, I figure, it should start to rebound nicely. I mean, I think their net asset value is trading them at they should be trading closer to 25. So, yeah, if you're an income-oriented investor, interest rate cuts continue. These companies should start seeing some bolstering over time. So you just got to be patient, right? These are, like, again, there's a big difference between growth companies like Google and income-oriented companies, perhaps like RioCan or ORealty or SCHD, right? So keep that in mind. It depends on what you're looking for in your portfolio, not financial advice. I think Google is a definite buy. Yeah, I'm trying to hold myself back from not owning like a stupid amount of it because like I could easily just keep buying it. I'm just fighting myself. I'm like, it's appropriate. Maybe a little bit more, but I can't make it more than 10%. And then if it bounces up way too much, I'm going to have to start selling it. But man, I don't know how anybody, and everyone's waking up to that. Like I was so against Google. A lot of people were for a little while just because of the fear of AI. But now Google's kind of got over that hurdle of, hey, they're still growing. A lot of people use their search features. Like they've kind of proven that ChatGPT couldn't steal search dominance and all that. So yeah, I think it's the clearest buy on the planet. I think like anybody that does fundamental analysis, which by the way, fundamental analysis is pure Fugazi, past performance doesn't equal future return, blah, 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 blah. But still, like for where the business is going, the cash flow, the growth, every indicator is like outside of this monopolistic fine. Every indicator is kind of a green light, in my opinion. How about CNR, baby, the National Railways for young investors? Yeah, if you're trying to build a portfolio of individual stocks and you're looking for foundational companies, I'm presuming you're talking about Canadian National Railway, right? Yeah, I think, look, if I was looking at like really building like a recession-proof business, but you have to keep in mind what you're buying are not growth companies. Again, we're getting into the description of like, maybe less growth isn't a bad thing if you're looking for better stability and less volatility. So you could look at things like CNR. You could look at things like Waste Connections, Hydro One, like Loblaws, a lot of the food stores out there. There is a lot of great companies that do exist out there that, could really build a foundational portfolio again, I really recommend looking at, like, I brought this up a few times. I don't buy it. I think you could build your own portfolio because the management fees are pretty high, but look up the BMO low volatility ETF. I think if you look for companies that naturally have low volatility over long periods of time, what you're going to find are these companies that are technically, again, I don't want to say recession proof because technically Apple's recession proof, but that doesn't mean their stock's not going to tank miserably in a bad market environment. But yeah, when you look at this ETF, where are the holdings in here? You just take a look here. Like you get Metro, Empire, Loblaws, Waste Connections, Hydro One, like literally all the stocks I've talked about. Fortis, they even have BCE in here, which is kind of funny. So for some reason, they're buying some very small shares of BCE, and this is just the top 10. There seems to be a lot of, can I see the other holdings? Can I not click something that shows me? Anyways, you get the idea. Fun fact. I'm just trying to, I don't want to pull another page up because it'll click off this on the stream, but you get the idea, right? Like look at literally what you want to own and just figure out what kind of investor you are if you're buying these individual stocks, or even still like buying this ETF isn't going to kill you either if these are the kind of stocks you want. I'm just trying to find the, where is the year-to-date return is 17%, which is pretty nice. Where is the management fee though? I was pretty sure. Yeah. Management expense ratio. Why is that so That's not right. Sorry, that's wrong. There's no way that's right. Where is the management fee? Is this actively managed? Yeah. I can't even find it. I guess I'll just pull up the fact sheet. It might click off, so just bear with me for a second if I lose the screen, but let me just pull up the fun facts. That's not helpful. It ends up just pulling up a whole list of stuff, and I have to find the ETF on it. Lame. Prospectus and financial report. No, that doesn't help me at all either. That's lame. But you get the idea. I would look into these kind of ETFs because you'll find a lot of fun stocks and low volatility ETFs. I think that's where the best stocks live personally. If you're looking for like less volatility, more, I'm going to say contrarian to market risk, those kind of things. Thoughts on Adobe, United Health, too undervalued, and ASML. I love ASML a lot. I'm surprised ASML, like, I think it was probably, how's it been doing anyways? And then we'll talk about a couple of the other ones there. ASML, man, I can't get over this company. When it did a massive dip, I debated on buying it. I still feel like I missed the hype cycle when I sold TSM a little bit too early on the back of, Buffett selling kind of feared me a little bit there, but I missed the crazy run. But yeah, ASML, the growth this company has, whew, baby. I'm shocked that it's trading at a reasonable valuation for the growth. I mean, from 2020, it went from 14 billion to 27 billion. I guarantee you companies like Meta, or a lot of companies that are producing some of their own chips, I wouldn't be surprised if they're using lithography machines that come from ASML. The only people that can play in the chip game are people that can afford these really expensive, really, really expensive machines. They cost like $250,000, I think, are the cheap ones. Cost like a couple $100 million. But you're literally buying a money printer because let's be real, chips are the new oil, and the gross profit is really great on this company. Like everything, I mean, even their balance sheet, like they're really strong, a lot of liabilities, so the company, not that it matters for them, but you get the idea. I mean, ASML, whew, baby, let's see what their cash flow is like right now as well. I haven't looked too much into their last guidance. I'd be curious to what they're guiding for, but yeah, cash flows are super strong. Lots going on with this company. I love this company a lot. I've always been very interested. I honestly, I always said if I could go back to school, I'd love to learn, like, to work for a company like ASML. I think they're on the forefront of like literal godlike technology, or Google, quantum computing. Some of that stuff would be super, super cool. Yeah, what the F, man? 15 likes. People hating here. 15 likes. Come on, guys. AMD. Oh my God, AMD, man. I haven't done the rabbit hole search like Jeremy has, but thoughts on AMD? It's got a forward PE of around 25, CEO of the year, and it's out of flavor lately. So it's gone down in price significantly. Yeah, I know a lot of people screaming that AMD is a huge buying opportunity. It very likely could be. I'm not going to do a full deep dive on this video. I mean, we can take a quick peek at it because, again, I have to look at guidance. It really comes down to what the future expectations are. Because yeah, the company, like, off current cash flow, I don't know if they have depreciation or what they're doing, because I hate looking at like companies and being like, they're so expensive, they have 106 PE. It's not like Tesla. Tesla's actually trading at an insane forward PE. Some of these companies have crazy depreciation or one-off events that really spike that for no reason. So I'd love to do a deeper dive and see why it's potentially, favorable. I'm sure, I mean, the growth on it's crazy, again, from like 9 billion to 22 billion in just a handful of years is nuts. It's just absolutely nuts. They have like no debt on the balance sheet, so that's great to see. How are cash flows? Cash flows are still pretty good, getting into the billions. It looks like if we take a look at the quarterly cash flow is still going up. Still a lot of growth here, man. So I can see why people might be touting it. What are the statistics? This thing's not like shorted or anything, is it? Are people shorting this company right now? A lot of institutional ownership. Yeah, there's a couple percentage shorting it right now, so there could be a bit of a rebound if you get a pop in it. Perhaps. Yeah, lots to look forward to there, perhaps. So we have our TFS rooms next month, baby. What will be the few good picks under the TSX? Honestly, depends on what you want, man. I would just focus on VFV or look at really broad-based global market index funds. I know it's boring as hell, but I'd just be really careful in this market environment. Like I said, it's weird because like everyone's just like, you're not risky enough. And it's like, but I am. Like, am I the only one that gets more scared when markets are pumping? It's like, I went through this period of like, man, we were so aggressive in 2022. Like, I just go back and watch some of those videos and I'm like, fuck, like, man, we were going nuts. Like, I was just like buying a lot of, like, really going hard in the ETFs. The wife was doing good. We just kept buying and buying and buying. And it's like, look at our portfolios now. Like, we're loaded. Like you can't, like there's so many YouTubers out there that are just loaded right now. And a lot of them are saying, hey guys, I don't know if this is the best time to be like being that excited about Palantir or the best time to be excited about like a lot of these stocks. I mean, they've run up so much and the valuations have extended so much, guys. Like, I think I was watching Dan Ives and he was just saying that like Tesla's robotaxi is worth like 1 trillion to the market cap. You understand like Uber and Lyft combined aren't even worth like $120 billion or something like that. So they're going to be worth 10x today what Uber and Lyft are worth. They're worth more than every car company combined and still make less money than GM. It's like I get the potential that's there. But the market risk at today's valuations is just downright bonkers. It's like, come on. I'm not saying it can't grow into that, but like if you buy it at today's price, you have to recognize that you are in one of two camps. You're either completely fucking delusional and you're really willing to wait 30 years for these prices to catch up to values, or you're a diehard Tesla fan that is willing to ride the volatility and you're going to buy the dips when they come, because they are going to come, guys. Tesla is going to be a very volatile stock when it's trading at as much as NVIDIA was when NVIDIA was growing at 100% clips. Think about that. NVIDIA was trading at over 100 times multiple when it was growing at an absurd pace, and it is still growing at an absurd pace. It could still surpass Apple if the demand keeps up. Yet Tesla hasn't done any of that. So like, calm down. I mean, you're already paying for FSD. So they're not going to make any upside on FSD. You already paid for it. It's priced into the fucking stock, the earnings. So where are they going to make money? Hailing rides. Okay, well, what is the hailing price going to be? How fast is that going to scale? Elon's not going to shit talk China. China is something that, you know, Trump can't shut up about, but Elon's shitting his pants and he's going to play good boy to China because that's where all the money is. It's like their biggest market opportunity is also their biggest market risk right now because of geopolitics. Calm the fuck down, guys. Calm down. There's no rush in this market environment to get too excited. You know, don't be overly irrational. Keep that nice little market emergency fund just in case things dip. I know, like, it's so funny because usually I'm not like this. I'm always 100% bullish, but like, I don't know. It's just when everyone's feeling like I'm feeling, it bothers me. I like when the markets are down and everyone's pissy and nobody wants to watch my videos. And I'm like, buy, like, let's fucking buy. And then we're now in this market and I'm like, fuck, I don't want to buy. I can't chase these companies. I'm even scared of the S&P 500. I'm going to stop buying it, but I'm going to just take it easy. Take it easy here, folks. Kyle, I'm scared to hire you for some events, scared of the potty mouth. What are you going to hire me for? I'm not a magician anymore. My language was clean when I'm on stage. The wife complains that she's been getting too much of a potty mouth, and I blame it on me. I don't know. I come from a farmer's life, bro. I grew up shoveling shit and stacking hay. I did not come from the most privileged of lives, all right? So I've seen my fair share of shit, literally. And that comes with language, unfortunately, and a lot of political rhetoric, which leads into the next conversation I want to discuss really briefly here. I don't know if you guys saw we're actually going to finally get an early election in Canada, I think, by the looks of it. You know, I don't know if you guys saw leading into the holidays here before Congress decided to slip up. But just take a listen to this, man, because finally Canada is going to see some crazy shit.
My message to,
and I also want to point out that at least Poilievre, like, this is what Trudeau should have said. And I don't know why no one said it. I was so annoyed that Doug Ford, like the premier of Toronto or whatever, right? Like the mayor of Toronto. Like, I was always super annoyed that like he was the one that was basically telling Trump to F off politely. I'm like, why is Trudeau like pandering to this shit? Like, you know, Trump just like, that's his control. Like, I'm just going to poke fun. I'm going to like make people on edge. It's a very good business tactic, but I got to give some credit to, I don't care for conservatives or liberals, but come on. Like, we don't have to take shit.
to incoming President Trump is that first and foremost, Canada will never be the 51st state
Is
of
that
the
all
U.S.
I'm saying? Like, come on.
We have a heroic history, a great people, and a very proud future ahead of us. And the president has raised concerns about our border and the government's destruction of our military. Well, we should reinforce our border to stop fentanyl, guns.
Was that so hard? It's like Trump's just like, we just need to deal with the drugs, the gun. We need to deal with that in our own border. forget Trump. Like, why aren't we doing this shit now? I'm like, man, why was this so hard to say when Trump was like battering us?
Stolen cars, not just for President Trump, but for our own people after 9 years of Trudeau losing control of the border. And we need to rebuild our military to protect our continent and our country against Chinese and Russian submarines and spy balloons, terrorists, and other risks. And to rebuild that military with a warrior culture, not a woke culture. Finally, on the trade issue, what I'd say to President Trump is, look, yeah, we have a trade surplus with you, but that's because we're basically donating you our raw materials and letting American workers profit from $100 billion of underpriced Canadian oil and gas so they get the money and the jobs. I would be more than happy to bring that home. And that's why I will repeal all the insane anti-energy and anti-resource laws the NDP Liberals have passed so we can liquefy, upgrade, and transport our own natural resources. And
Alberta's like trying to separate itself from Canada. Like the amount of drama in our country right now, because like, just again, I don't care for Trudeau. I don't care for conservatives. I just care for like fucking logic. And it's like, why is our country so like, right now? It's like, come on, guys. I'm like, I'm working hard here. You're working hard. We got families. Let's get this fucking shit together and stop being so like divisive over everything and so woke. So people don't think Justin Trudeau will win again. Right now, the betting odds are 90% conservatives are going to win. I want to do the bet, and it really bothers me because I'm not a gambling addict. But if you, for every $10 you bet right now on conservatives on what is it? Is it Bet365? I can't remember what the betting site is, but I think right now for every $10 you bet on conservatives, you can only win about $1.13. So if you put $1 million into a bet, you're going to make about 100 grand. Like you really have to leverage a lot because that's how much the pendulum is swinging in the conservatives' favor. So yeah, I'm sure you're joking though, Vic. It's like, you know, better than the lotto. So he has a chance. Well, I mean, if you bet $10, you could win 50. So yeah, if you want to take the odds that aren't in your favor, but I think it's a slim chance at this point. I feel bad because like they're trying to do stuff, but everything they try and do just fails miserably. Like, I mean, they were trying to do the GST and HST holiday, and then Pepsi basically told them to F off. We're not doing that. It's a tax technical nightmare. Figure it out for yourselves. Take the receipt to the government. Go get your own rebates. That was a flop. They tried to introduce housing fixes by saying if you own a residential home in the backyard, we're going to let you supplement it by buying modular homes and dumping them in your backyard that you can rent out. But then people realized, fuck, if I own a house and I turn it into that, now it's a rental property. And when I sell the property, I'm going to have to pay full capital gains tax. Like I'm going to lose any benefit I have from a primary residence for capital gains in the future. It's like you can't win for trying right now with the Liberals because I don't know, maybe they just don't think shit through. I'm not sure. It's like, why were you raising carbon tax in the middle of an inflation cycle? You couldn't just pause it. I get it. Like I get the idea of carbon tax. I'm not for it, but I get it. And it's just like, but I lost all respect when they're like, oh, we're in the middle of an inflationary cycle where we needed to jack interest rates. But guess what? The number one cause for inflation is gasoline. It raises the price of everything. And we're going to make it even more expensive because that made a whole lot of, and even again, the premier, Doug Ford, was like, just pause it. Just pause it. Like you don't need to get rid of it. But I mean, come on, man. Like you got to admit the Liberals just, they can't do anything right. Unfortunately, they're trying. Should I put $10 on Justin or Palantir? Ooh, man, that's a tough debate. I think, I mean, logically from like the risk return reward there, whoo, baby, at least with Palantir, I doubt you're going to lose it all. I mean, Palantir could correct, but you're going to lose it all, I think, if you make the Liberal bet. Can you do a video on corporate class ETFs? Ooh, corporate class ETF. That's a very fascinating conversation. Are you talking about like, what do you mean by that? You mean like investing in ETFs in a corporation or what? Man, I got to do some corporate videos. I'm thinking about like flipping this channel upside down next year. There's a lot of things that I think I'm going to change. I don't think a lot of I'm like debating on, should I do what people like just continually seem to like with my channel of like full transparency and like portfolio reveals. I might just change some things up a little bit here, but we'll see what next year brings. I'm definitely going to try and do a live stream maybe over the holidays so you guys can see some fun videos and we can dick around and talk stocks and just have some fun. But I've been here from the start with you, bro. All the best for 2025. Yeah, I agree, man. It's going to be an interesting year. Do you think an early election will be called? And when do you think it is going to be called? They just announced that they're going to do it. Right now, Pierre's trying to rope them back because what ended up happening was Jagmeet Singh is the guy that's holding up the whole election. The NDP has the final non-confidence vote that's been holding back the early election. And a lot of people, I'm sure you've seen it, have been grilling the living shit out of the guy for not calling the vote. Because all these Canadians want the vote. And he's like, well, let's just leave everything on the table for now. And then he says, okay, now that the holidays are here, we're going to wait till the end of the Parliament holidays, which is like January 27th, I think. So like a whole month from now, and then they'll call the election. But now I think because of the uproar in society, I think that's what Pierre Poilievre is trying to say is, no, we want the election now. We're going to call it now so we can have it right after the holidays, because I don't want to say it's a crisis, but that's what the Conservatives want to call it, that we are in a crisis mode and it's time. There's no confidence in this. Like, how can you keep, a guy in leadership that no one has confidence for? It'd be dumb, right? So we'll see what happens. Yeah, his pension at stake. I don't know what the deal is with the pension. They said that Jagmeet's pension was actually becoming available January 23rd, so he will still be entitled to it, which is why he wanted to wait till after the election. But then other people were saying that's not true. I don't know. It's self-interest. It's like, what does Charlie Munger say? Like, show me the incentive and I'll show you the result. It's just like, if his incentive is to get his pension, then yeah, he's probably going to make the decision that comes closest to getting his pension. Let's be real. That's how politics work. You think Trump's in office because it's all about the people? It's all about Donald Trump. Let's not get confused. Yeah, how can a guy almost take a bullet and choose Donald Trump presidency over family and living my retirement years? I don't know. Guys gotta again, it's a different mindset. We defrosted a lot of lands. You think carbon tax will make a difference? How about those cargo ships that burn through diesel? Oh my God, cargo ships are so disgusting. Like, you want to talk about carbon emitting? Holy shit. Cargo ships aren't even allowed to show up to ports and cities because of the amount of pollution and how dirty they're polluted. It's like the dirtiest oil they burn too, right? But maybe they do go electric, who knows? But honestly, I don't think carbon tax matters. I get it, because basically it's to take, people that are carbon emitting, take some money from them to help companies that innovate, and we'll give subsidies to companies that innovate on less carbon emitting things, and that's where the money's going to go. But at the same time, it's really fucking hard to tax the very thing everybody in society needs for groceries, housing, construct, everything, plastics, you name it, come from fuel or oils, right? So I don't know how you can tax it when Canada Canada takes in more carbon than it emits for the most part. Some people debate that when it comes to international trade and these boats and all that stuff. But I think for the most part, society has to start evolving and catching up. And I think people want things to be clean, but you have to let the market decide that. Our government got too big. I don't think government should have a say. I think us as a people, if we agree on less carbon emissions, then, we'll vote with our dollars and we'll vote for companies like Aduro. I'm voting for the future that Aduro could bring. So I buy the stock. People buy Tesla because the future that's going to bring a better future for society. So people vote with their dollars. The government shouldn't be doing that for us. I should be the one doing it for me. What happened to the streams with Matt Money? I don't know. We just don't do streams anymore. We kind of separated on difference in opinions about certain things and, a bunch of other stuff. I wish the guy all the best, though, for sure. But yeah, I don't know. Just was what it was. Do you think BCE and TELUS will cut their dividends? I think BCE probably will. TELUS, I don't think will. I think they got a little bit more leniency on their balance sheet. And again, you have to remember, TELUS is struggling because, again, this doesn't mean they're bad businesses. It doesn't mean they're not going to recover. I just don't like Bell's legacy media business. I think that's really killing them. And their yield is so high, they could cut it in half and it'd still be a huge dividend. But TELUS, on the other hand, they've been doing a lot of restructuring costs, and same with Bell. So you have to remember, there's a lot of short-term pain that isn't just in their cash flow, because they have to pay out severance. They have to pay out, so much to all the employees they laid off, which I think they're starting to brink the edge of that, plus higher interest rates. So they're going to be a good recovery play, I think, come 2025 with the current interest rate cuts we have. Is this the end of the green energy push? Potentially, but I still think green energy is going to be the future. I just don't think it's going to be government. You should do a video on corporate account investing and the pros and cons. I will after I talk to my accountant. I have a meeting with my accountant just before the end of the year, and we're going to have a big discussion because I pulled some money out and I paid myself, which is the first time I've done that. And it was probably not the best idea because now I have to deal with the tax implications. I put a good chunk of it in my RSP. But the other problem now is like, how do I claim it? Am I able to claim it as a dividend? If I claim it as personal income and it was paid out as like a salary or something, then the corporation has to pay tax and then I have to pay tax on it, which sucks because then I have to pay the infamous double tax. But I think I can avoid it. I don't know. The accountant and I will have a good conversation about it in the future. But investing in a corporation is cheaper. It's easier. It's just later on when you actually have to utilize the cash. That's where you got to get interesting with it. You got to get fancy. And that's where you're going to come up with the extra expense of having an accountant, unfortunately. Tell us sub 20 is a good idea, a good deal. Yeah, probably. Time will tell. But again, people get impatient. You know, when you're buying an individual security, you're disconnecting yourself from broader market returns, which means you're on a different time frame than the rest of the market. And sometimes those time frames can take longer for recoveries. It doesn't mean it's not coming. It just means there could be more short-term pain. And again, stocks can drop 50%, like we're seeing now. These are great companies, infrastructure companies. They can't go anywhere. We need them. We rely on them. Yet they're dropping 50%. And some people are like, fuck that. It's a horrible company. Never buy it. It's like, okay, well, are you still paying your phone bill? I guess they're still making money. But time will tell, right? And I think Manulife, BCE, and then could be next man. I think Manulife could be the next stock to tank. I think we're going to see cash flow start to deplete from high interest savings in Canada. So just be careful with the insurance players. Time could tell. A video setting up a corporation structures. Oh my God, dude, you're going to go through that hellscape. I think I did a video out on the past. Setting up a corporation, if you do it on your own, it's very cheap. A lot of people advise on getting lawyers, but you don't need them. You don't need lawyers or accountants to set one up. But I promise you, it's a fucking endeavor. It takes quite a bit of effort. You got to go through a nuance report, get a name. You got to go open up a corporate bank account. If you want to open up a corporate investment account, get ready for paperwork, baby, because it stacks. Does it ever stack? Is Enbridge a buy? I don't know. It's a huge position in our portfolio because of VDY. I would rather just buy VDY. I still like Enbridge a lot, but hopefully tariffs don't kill the shit out of it. It's primarily a pipeline company, and thank God they've diversified and I think they've done a lot of the right things. When they diluted us as shareholders to purchase that natural gas company in the United States. How is natural gas trading these days, anyways? I'd be very curious to just take a quick look. Natural gas prices. Because I think Enbridge is, don't quote me on this, but I'm pretty sure it's North America's largest natural gas company. I think they're the largest natural gas utility. They're huge in Canada, and now they're huge in the US. And for some reason, natural gas prices are spiking again, probably because of the winter season. I would presume. I can only presume because you see these cyclicalities that happen in natural gas. I'm presuming it's because everyone's buying a lot of heating oil for their homes. So Enbridge will see a big benefit from this, I'm sure, which is super interesting. Vic, I just got a freedom plan after being with Robellis for minus 15 years for $35, which includes US and Mexico roaming 50 gigs. Yeah, the plans are getting very competitive as well, right? What do you think about NEO and battery swapping? How is the old NEO doing? I haven't looked at that stock, man. That's an old meme stock. I haven't heard the word NEO be mentioned in a long time. The old NEO, man, it's still down in the gutter, eh? The stock really went through that hype cycle period. Is it a good stock these days or what? I feel like a lot of these companies are facing bankruptcy, just because they got to find some financing. Rivian's done a good job at financing. You can't always trust people that are like struggling with some of these because usually big companies will swoop in or a lot of investors will get excited. It's kind of like they'll help pump the stock a bit and give them some cash liquidity, which can be good too, But if you take a look, gross profit's absolutely garbage for the amount of income that's being made here. Cost of revenue is insanely high, typical for an auto company. What more could you expect? Assets to liabilities, not great, not terrible. At least they're not negative. Cash flows suck. They're burning capital worse and worse. This is what's killing them. They really burned $15 billion last year. What about quarterly? Will they not show me the quarterly report? Damn, they burned through a lot of cash last year. Jesus. Higher interest rates, I don't know if that affects them as well. They're Chinese only, right? NEO doesn't exist in the US, do they? They're just purely Chinese. And I think battery swapping is great. There's nothing wrong with that idea. Who knows? Time will tell. Otherwise, folks, I can't believe we've been rambling here for a straight hour. green energy like nuclear. Canada is actually a leader in nuclear power. I think we have a lot of modular nuclear plants going up soon. And I actually know somebody that's working on one. One of my family members, I think it's in Pickering. Don't quote me on that. I can't remember where it was. And he said like he's not even allowed to take photos of the construction of the plant, but they're basically helping build the entire plant at which they're going to house these modular reactors. But yeah, he's like super secretive about it. He's like, my boss won't let me talk about it. So I think it's super cool. Whatever happened to graphene battery tech? Battery tech, I think, was overhyped. I think Elon promised that as well. A lot of people thought, oh, solid state batteries are next. And like, it's such a struggle right now to like enhance battery tech. I mean, look at like, why can't we get like 600 miles of range out of battery, 500 miles of range? Elon promised way more advanced batteries and they just never came. And they're still not here, right? So I'm curious I guess it's a lot harder of a problem than people thought it was. If you look at the free cash flow versus dividends paid, BCE and TELUS both are not covered by, but again, I'll read the rest of your comment. I don't want to cut you off. So they are in the same boat, but BCE is doing well. So again, here's the problem, guys. Free cash flow isn't an determining factor to payout ratios. You really have to understand that there's depreciation and amortization costs. I feel like I'm a broken record. I'll say it one more time for those that don't understand like the concept. But like if you own a business like I do, and let's say you have enough cash today, you have 50 grand, you go buy yourself a Tesla, right? The next year, you've already paid the Tesla off. You're using it to generate the cash flow at your job. That cash flow never changes, right? Like you're making the same money off that car and you will for 20 years, but that car is going to depreciate in value. So the car is going to lose a lot of money over time. And I mean, Teslas, they plummeted in value. So you can go to the government and say, hey, this Tesla's still generating me the same cash flow, but I own this asset, a car, and it's lost me money. I'm going to write the value I lost on this vehicle off against that cash flow, right? So what ends up happening is when you look at the free cash flow of TELUS and Bell, it doesn't take into consideration the depreciation and amortization, which ends up just being added cash that you don't see on the balance sheet. And I can pull it up. I mean, really quickly, like if we just pull up TELUS investor relations, and you should do this with all companies. This is why I'm telling you, when you look at price to earnings multiples, the price to earnings multiples aren't accurate. They don't take into consideration so much with certain businesses. Most balance sheets aren't as clean and cut as say Google is. Like this is the problem with big tech. Like their balance sheets are so clean and so easy to understand. We tend to kind of over extrapolate them into, a bunch of other businesses, but I'm trying to find the depreciation and amortization costs right here. So like, let's just pull it up for Bell real quick, right? Or TELUS, sorry. So for TELUS, if you take a look at the depreciation and amortization, like they depreciated 551 million on tech, on their digital solutions. Like they break down what they're depreciating. So the total depreciation so far I think this is total for the 3-month ending. So just for the 3-month ending for September, they depreciated a whopping, what's the total here? I'm trying to find the total. About no, that's not right. What's the total here? 597 million, and they amortized about 371 million. So I mean, think about that. Like $600 million was just depreciated. Like that's a huge amount, right? So I mean, figure out what their dividends are and add an extra 600 million to their EBITDA and their cash flow or whatever. I mean, this is why like companies like Enbridge show you like different cash flow metrics, because they know they have a high depreciation values. So you just got to keep that in mind. Fun little trick. And a lot of small caps do that as well, right? Like again, cash flow, a lot of people don't want cash flow on their books. So they'll try and depreciate as much of it as possible to keep that for acquisitions or whatever. For 2025, I bet the premier there, or Olivier Premier, is a businessman who I trust. Just to be sure, I don't trust a businessman. I mean, we all tried to trust. What were we just talking about with PayPal there? We're all trying to trust Honey. It's like Trump. Like, look at Trump's business history. Like, he's not trustworthy. I mean, business people that work at scale. I mean, you go to any multi-billion-dollar business and people are dying. I'm sorry. If you are making billions of dollars, somebody is dying at the hands of your corporation. United Health, you name it. It doesn't matter. Elon Musk, I guarantee you people die at their company all the time from factory mishaps, all kinds of shit. You just don't hear about it. It happens. It has to happen. I don't know any company that makes billions of dollars that can honestly say there's like moral injusticeness in a lot a lot of stuff that comes into that, right? So just careful with politics. Take politics with a grain of fucking salt. I don't trust any of them. They're politicians. Did you not grow up hearing that? Like your dad never taught you that? Don't trust politicians. They'll say whatever they can to get power. And then what actually happens is debatable. Like, I'll promise you the future. Now the future's here. I can't promise shit. I don't know what's going to happen tomorrow. I can't promise you're going to be alive tomorrow. It's literally like what Trump's new motto is going to be, right? Granite construction, yeah, GVA infrastructure contracts. Interesting. Maybe child mind cobalt. Anyways, I'm done. Yeah, child mind cobalt. Yeah, I mean, come on. Like, we all know the shit that goes on globally. It's a crazy world out there, folks. I'm surprised it functions as well as it does. Let's be real. Most of us just live in a nice little bubble and, live the reality you want to live. You don't need to be absorbed by all this crazy shit every single day. But stay cool. Stay awesome, folks. And as always, I look forward to seeing you in the next one.